is the sound of the closing bell at the New York Stock Exchange today.
Yeah, the Dow Jones really remained flat all day. Take a look. It's closing down about 3 points. The S&P 500 NASDAQ also closed the day really relatively flat.
Will McDonough joins us now. He's a CEO and lead portfolio manager at EMG Advisors. All right, the question that we like to launch this segment on, what was driving the market today, Will?
Well, I think investors are still trying to calibrate and figure out what is driving these markets. You know, as we see Fed activity, people try to react to that. They try to predict it. As we enter into these earnings weeks, people are trying to play a guessing game. And I think investors need to make a decision. Are they trying to day trade this market? Or are they trying to zoom out and understand the macro factors that are affecting this market? And you can't have it both ways.
Well, let's talk about earnings reports, because there was another busy day. Notably, Goldman Sachs, Bank of America. Tell our viewers, what were the biggest takeaways?
You know, I think when you see a rate environment where banks don't have to be as innovative to have revenue and to have market share, you don't see banks innovating. So you see Goldman Sachs getting out of some legacy businesses that maybe weren't top performers. And you see Bank of America having good numbers coming from their lending units and such, where they have pretty efficient operations that are well built and quite robust. And I think people are just flight to quality, flight to safety. And the banks that are in the mainline businesses that have good yields and have good, operating margins are going to have a lot of success in an environment like this. Sadly, the small banks and the regional banks are going to get absolutely annihilated in an environment like this.
And they're so important to our economy.
Now, Will,
that's where the innovation occurs, unfortunately, is at the local bank level. You know, they're not incentivized to fund innovation if you don't have to. I went yesterday to buy a car, and they offered me a 9.9% rate. I mean, nobody has to take risk anymore if I'm paying 10% to buy a new car.
So let's talk about the numbers. I mean, what's the latest data telling you about the state of inflation and the potential for more and more rate hikes?
Well, I think that the Fed has to continue on their path, and they have to see this thing through. You know, we talk to investors a lot about the fact that adjustments of Fed rates are like adjusting the thermostat in your living room. It doesn't react immediately. And so you have to give this thing a quarters to flow through. And the data that we look at today with housing starts, with jobs numbers, those are things that I think are more relevant to how our economy and the health of our economy is doing than what's the Fed going to do next quarter, because there's a real lag to that data filtering through to the market. And I think investors need to just palate that a little bit better.
All right.
Will, thank you so much for that